Who pays the mortgage when your house burns down in a fire? Guys, I'm going to answer that question in just a second, but let me give you just a little bit. I am no expert, but let me just give you a little bit of a heads up here. If you go to lose your house in a fire, you are still going to be responsible for the taxes on that property. Now, your tax assessor will probably and should readjust your taxes so that the value of your house you're not being charged for any longer. But you are still going to be charged taxes on the land. Now, some places in Colorado, when we lived in the mountains, the land was of higher value than the little shack or 1950s house that was on that land. So even if they do adjust your taxes, it may not go down all that much if your land is more valuable than your house was, which is a very good possibility. In places like LA and where we used to live in the mountains in Colorado, that's a very good possibility. So they will probably lower your taxes some for not having the structure on there anymore, but you will still be responsible for paying the amount that the land is worth, okay? The taxes on the amount that the land's worth. This video is brought to you by our Dining on a Dime cookbook. We have quick and easy recipes your family will love to help you get in and out of the kitchen fast. Please visit us at livingonadime.com. It's 25% off. Now, who is responsible for your mortgage? Well, you are. You purchased that house and you got a loan for that house and you said, I will pay this loan back on this house. So the bank, in good faith, gave you a loan. You are responsible for that loan. Let's say, I don't understand why people think that loan companies are ripping them off if they're still responsible for the mortgage payment after their house has been, totaled in a tornado, hurricane, wildfire, flood, whatever. You are still responsible for that house. So if you didn't have insurance on it for whatever reason, you're still responsible for it. If you have a loan, which I can't imagine anywhere where you could have a loan and not have insurance. I mean, I don't know of any cases where people are able to get a mortgage without insurance unless it's privately through families. So if that happens, the loan company might give you an extension for a few months to wait on paying that mortgage while you're getting your insurance and all of that settled. It's very possible it could take you years to get this settled. So you may get an extension for a few months, but you are still ultimately responsible for that mortgage payment and the interest and the taxes and all of that on your loan. They're just going to tack it on at the end of your loan. If your house burns down, are you still responsible for the mortgage? Yes, you are. It's just like, let's say you buy a TV on your credit card and you bring it home and 2 months later your kid throws a baseball through the TV and it's not paid off on your credit card. You still owe the money for that TV. Even though you don't have it, it's not working, it's in pieces, you still owe the money for that TV. This is why we are so adamant about getting your finances in order so that when catastrophes like this happen, you can at least have some sort of a cushion to fall back on. You don't have to worry, oh my goodness, I don't have any money to go rent a hotel room. I don't have any money to buy any food, or if I'm displaced from my house, if I have no house left. This is why you have a savings. This is why you get your debt totally paid off so that when emergencies like this happen, you just aren't totally stuck without anything at all and any way to take care of yourself. So I know people are going to say, oh, those are greedy banks. Oh, those are greedy insurance companies. These places are a business. They are not doing this just to help out society. They are doing it to earn money. They are the ones who are fronting the money to you, and you are at risk by taking out a loan. And you have promised that you are going to pay this money back. I know that it emotionally seems unfair that you have to still pay for a mortgage for a house that's been burned to the ground, swept away by floods, or swept away by a tornado or hurricane, whatever the catastrophe is, but you will still owe the money on that house. Now, what would I do in that situation? I would call the loan company, explain what happened, and see if they could defer my payments for 6 months or however long, 3 to 6 months, until I could get things situated and organized. But just realize that's going to be tacked on at the end of your loan. Yes, you're still going to have interest on that. The bank's not doing this for free. There may be some charges, some finance charges, stuff like that. As we were editing, Mike wanted to say something that I had forgotten to say. So go for it, dear.
Well, I was going to say, I think most people in that situation would say, hey, I don't have a house anymore. And ultimately, if there's nothing else you could do, you could just not pay. And I think, I'm not a lawyer, so you'd have to check to be sure, but I think that the only recourse the bank would have then is to take the property. Well, property's not worth anything to you at the moment. However,
no, they might be able to take the land.
Yeah, they would take the land. They might be able to come after some of your other stuff, so you'd have to check with your lawyer, financial advisor, or whatever on that. But what I would say is, in a situation like the LA fires, it's likely that the government will step in and at least offer to pay. They may not pay at all, because a lot of times it's not a magic bullet with the government stuff. But that being the case, you would still need enough money to be able to deal with the mortgage between now and when the government does it, because it can take them a year to do anything. What I would probably do if I were in that situation, though, is I would probably call the mortgage company first and ask them, hey, can I wait and pay on this until after we figure this out, because it looks like it's going to be a government thing. And if they say no, then I'd probably call a lawyer and say, hey, what happens? How much should I deal with this? Because if you pay for it and then the government comes in later and says, hey, we'll pay off what you have, they probably won't pay you back for the amount that you've paid in the meantime. So you're going to have some unpleasantness, and you'd want to take care of that. Also, if it hasn't happened to you, if you're not in the situation where your house is already burned down, I would call your insurance company and make sure that you know that you're insured for that. And basically any kind of disaster that's likely to happen to your house, like if you're in a floodplain and you don't have, or if you're near a floodplain and you don't have flood insurance, it's probably not a good idea, because nobody's responsible but you if that fails. So I probably would call your insurance company and make sure you have coverage for that. And also, because a lot of values of houses go up in a lot of markets, if you're in one of those markets and you've owned the house for 15 years, you may be insured for the amount that you paid for it, but not for the amount that it's worth now, or would cost you to replace it now.
You need to make sure you have the rebuild cost covered for, so you're looking for the rebuild.
So you would call your insurance company and say, hey, I just want to make sure I have the house covered for the amount that it costs to rebuild it, if it should burn down.
Mm-hmm. Yeah, not the amount you paid for it. So if Grandma paid $100,000 for her house, but it's worth
$1 million now.
Yeah, it's worth $1 million now, but it would cost $1.5 million to rebuild it. You need the rebuild.
And I recently called our agent about this when we had a fire that was happening near us. And he said that there's a little bit of wiggle room where there's a certain amount it's insured for, and they go a little bit above that maybe, but not a lot.
We weren't covered.
And there were some coverages that I wasn't sure were good enough, so we raised it, because I'd rather pay an extra $50 a year and not have to pay the hundreds of thousands of dollars that you would lose if you're not insured for enough. And like if Grandma bought the house or Grandma or your mom or you and your husband or whatever bought the house 30 years ago for $100,000 and now it's worth $900, if you still have it insured for $100, that's all you're going to get if it burns down.
Yep.
So
make sure.
Yeah. And on the taxes, it may not be an issue for a little while because the tax bill only comes twice a year usually. But I would probably, if I was unsure, if I got a bill that was a lot, I'd probably call the county and say, hey, my house burned down. I don't have this here. And they would come out and reevaluate your property. And they probably would adjust your value to what it is. And if your house is burned down, it would be the value of the land minus the cost to demolish and remove all the debris.
Yeah, but, like I talked about this a little bit earlier, but you may have to call them. Don't
You will
expect
have to call
them to just come and do it for you.
Yeah, because if you get a bill, the bill, that's how much the bill is. You can call them and they probably can make an adjustment for you, and they probably would in that case. But ultimately, the property value is based on what the market would pay for it.
Yep.
And so you could say it's trashed, and
Yeah.
that would probably reduce your taxes greatly for at least the short term.
Yep.
But you would still be paying taxes on the time that you've already used the house up to the time it burned.
Yep. That's what I would do, but you are ultimately responsible for your loan if your house is wiped from the face of the earth.